At the start of the year, it finally felt like crypto was back again. Markets were heating up, hundreds of billions of dollars were being flowed into ETFs, and Bitcoin launched to a new all-time high at $109,000. Finally, altcoins were primed to rally at historical rates as we were seeing momentum shift, and I saw people in Kaizen making millions of dollars. But on January 20th, the day of the inauguration, everything changed.
Breaking news from Wall Street right now.
Massive sell-off on Wall Street.
Another brutal day on Wall Street. The market's tanking right now ahead of the closing bell, just seconds away.
The massive downturn in cryptocurrencies continued Thursday as more investors make an exit from risky markets.
The S&P 500 is down around 0.25%. The Nasdaq was relatively flat. Cryptocurrency trading platform Coinbase has lost half its value in the past week as Bitcoin and other digital coins continue to plummet.
Prices started bleeding, and at first everyone said it was just a correction and a healthy pullback, so there wasn't anything to worry about. You know, that's the usual hopium part of the cycle, because week after week it kept getting worse. Altcoins started nuking 60, 70 to 80% at a time, and some dropped dead and the markets went silent. The hype was gone, and the same people that were printing money and had portfolios at all-time highs went on to ride it all the way down, some even at a loss today. But recently, something's shifted. The markets aren't climbing as fast as they used to, but you can feel it. The volume is picking back up and the momentum is slowly building. And this is the part of the cycle most people ignore, and that's exactly why it's so important, as the smart money is quietly positioning before the hype comes back. Now, I've been in crypto since 2020, and I've seen this happen over and over again. When I started, I'm gonna be honest, I made all the mistakes from chasing hyped up coins, riding my portfolio from all-time highs to all-time lows, which ended up resulting in me losing out on tens of thousands of dollars during my first cycle. But I stuck around and I learned how this all works, and I've come to realize that the biggest wins come when everyone else is sleeping on the market. Now in this video, I'm gonna break down 3 powerful moves you can make right now, not just to get back up to where your portfolio once was, but to walk away with over $100,000 in gains when the market ends up turning around. Now, before we get into strategy, let's actually take a step back and take a look at what's happened before, because it's super important to understand as the crypto cycles tend to rhyme. And every few years, we see the same story play out. Massive hype, new projects launching by the minute with prices skyrocketing. And honestly, sometimes it doesn't even feel real. To be honest, in euphoric stages of a bull run, when I even open up my wallet, sometimes I can't even believe my eyes and I have to lock in a quick screenshot there. But when it comes to a point where prices crash, then everyone says it's just a correction, and it just goes lower and lower right before people sell at a break even or even in the red. And right here on the screen, you'll see the Bitcoin price history since 2011. When it peaked at $32, it crashed over 90% to $2, followed by the first real cycle in 2014 when it peaked at 1,200. Then it crashed down to 175. In 2017, we saw the same thing happen. This time, Bitcoin touched just shy of $20,000 and it crashed down to $3,000 a coin. And in 2021, we saw a bunch of different narratives blow up, like DeFi, NFTs, and the metaverse hype, and all investors honestly thought there was no way for a significant crash. I'm talking more than 50, 60, 70, or 80%, like we've seen in previous cycles, because with all these new narratives, they thought that this would keep expanding and going up. But followed by that $68,000 price point, we saw another crash down to $15,000 per coin after the FTX crash happened and a bunch of bearish news. And now here we are again. Right now, Bitcoin is currently trading at $101,000, and this market seems very promising in the first time in a couple of months. Ever since the inauguration of Donald Trump, we saw Bitcoin crash after these tariff news back to under $75,000 per coin. But since then, we've noticed a strong rebound with 5 straight weeks of green candles. Now, the entire crypto market has seen a little bit of a rebound. Currently, the global crypto market cap is at 3.16 trillion at the time of recording this video, and we're slowly seeing the coins rebound after the tariff news. Now, right now, with this momentum building up, a lot of people are still 50-50 on where the market's going to go next. But if you look closely, this is exactly what every bottom tends to look like, and it's usually right before the next major shift starts. Now, the first move that could set you up for over 6 figures in gains next cycle is happening right now. And this part of the cycle offers something people hope for when prices are super high, but when the time finally comes, they overlook this. And that is discounted prices. And I'm not talking about some small 10% dip. I'm talking about life-changing sales on projects that actually matter. Think about it. If you walked into a store and saw a 70% off sale on an item you were eyeing for weeks, you'd walk straight to that item and grab it without hesitation. But all of a sudden, when altcoins drop 70, 80, and sometimes even 90%, most people panic because instead of seeing opportunities at that time, they react emotionally and not logically. Now, recently, some altcoins have found a clear bottom after taking a big hit. I'm talking like Aerodrome Finance, Sui, Aave, and Virtual's protocol all look super great right now for a long-term position. But don't get me wrong, not everything that's down is worth buying. Most of them are honestly projects that didn't even have real utility in the first place. The only thing they probably had was a decent roadmap, but honestly, who knows when they would get to it. That's why it's important to focus on real projects. These are the ones that are building through the bull and the bear markets, and you'll never see them just go silent for months. And this is because these coins aren't driven off of hype. They have a statement to put out with their project. Now, I know the sudden dip that we get can be stressful. Sometimes it just feels like the dip keeps dipping and the dip that you're buying just seems to go lower and lower. But the one thing you can't do is stress about catching the exact bottom, because the truth is there's a 99% chance you won't. Nobody times it perfectly, and that's why simple strategies like dollar cost averaging are so powerful. As a long-term investor myself, I try not to pay too much attention to what's happening every single day. I mean, like, some of these people are trading on like 1-second time frames and are married to the charts. Now, the reason that I like dollar cost averaging is because it's not only beneficial for super long-term plans, it's also a very smart move during these choppy, volatile times, because when prices are swinging up and down week after week, the consistent buys throughout those weeks help you just cut out all the noise instead of trying to gamble on one single entry. So here's how you can start building a successful portfolio primed for the next bull run right now. Number 1, build your watch list. Now, pick 5 to 10 projects that you genuinely believe in. Some of the teams or companies that are still building or something that still has utility. Now, you don't need to chase everything. Focus on a few that you'd be confident in holding for a while. Number 2, set your dollar cost averaging schedule. Now, as a long-term player, like I said, I try not to obsess with timing the market. Instead, I invest regularly and try not to dump one lump sum, because that usually doesn't end up working out. So decide how much you can invest, whether it's weekly, bi-weekly, or on a monthly basis. Develop a strategy and stick to it. Number 3, track your entries. To try and time the absolute bottom is how people miss out on even more profit. Now, keep it simple and average in, but make sure you're also tracking the progress of your certain investments, because if a project that you've been dollar cost averaging into drops 10% in one day, you might want to go and double down and invest some more. Now, last but not least, be patient. You're not going to see results overnight, but if you stay disciplined while everyone else is panicked, you'll be in a position to win big when momentum shifts. Now, buying smart is one thing, but what you're doing and buying with your portfolio, especially during bear markets or uncertain times, matter just as much. Right now, a lot of people are still holding on to the same bags that they saw at the top, and they're too afraid to admit it, but they're emotionally tied to these positions. I'm talking about straight up projects with no future, no development, and no reason to come back at all. The only reason they're still holding is because they're hoping for it to magically 20x in one day. Now, if you want to survive and actually win during this next cycle, you can't just blindly throw money into these random coins, even if they're at the top 100 on CoinMarketCap or CoinGecko. Especially during times like this, you can be using that stuck capital to catch new opportunities. Now, lately, crypto's been moving quicker than I've ever witnessed, and narratives are lasting just a couple of weeks, and it's a constant rotation. I mean, we were looking at AI agents. Meme coins took a really prime spot in this last bull run, and then we also saw the base ecosystem blow up, as well as a few other ones that lasted maybe a couple of days. When these shifts happen, you need to look at what's in your portfolio. Clean out the dead weight. And yes, I'm talking about those random meme coins you were buying, hoping for a quick way to make your first million. I mean, many of you guys probably watching this have a project or two that you're emotionally tied to. It's 90% down right now, and you're thinking it's gonna 20 or 30x within a day. And I can just picture you guys sitting on your calculators trying to figure out how much money you're gonna get at all-time high, but what if it gets only half of that? And you're still falling in that constant loop. So if your portfolio still looks like it did last year, you're already behind. So the first thing that you need to do is, number one, audit your entire portfolio. Look at every position you're holding and ask yourself if you would still buy this today in the position that it's at right now. If the answer is no, simply cut it. Now, like I said, I know some of you guys are down on some of these plays. So this is where the second step comes in. Number two, take advantage of tax loss harvesting. First of all, if a project is dead and you're still holding the bag, there's no one else to blame than yourself. Simply sell this position and take advantage of the tax loss, because when you do your taxes and you lost 1K on this position, you'll end up paying less in taxes. It's the perfect way to cut loose with any coins you're emotionally tied to and that have no potential, because by selling these losses is number three, rebuild with intention. You can rotate them into new narratives that are primed to run. Now, that doesn't mean you can't throw, a little bit of money into a meme coin or two. That's not what I'm saying. But you need to have a strong position in order to be able to afford losses in those meme coins like that. There's a big difference between diversification and confusion. If you have so many coins you can't even explain what half of them do, then it's simply not a true portfolio. You don't need to be buying every single coin you see. You just need a few strong positions backed with real conviction and research. Now, once your portfolio is cleaned up, don't just sit around waiting for things to start moving again. This is the time to build your skills. Now, it may not feel like the best time since price action may be slow, especially during the times like this, during bear markets or uncertain times, but this is exactly when you should be taking the time to study the market and learn how to trade. And I mean, think of it this way. During the bear market, prices will stay relatively sideways if there isn't much action at all, which is really what happens during a bear market and in certain times. And in my eyes, this is like pausing the time, because you're actually able to look back and study what happened previously, what caused certain dips during a bull run, and where the bull run peaked. So by learning what happened previously, you're actually sharpening your mindset when it comes to the next bull run. Now, trading charts may look intimidating because it looks like there's a lot going on the screen, but you don't need to know absolutely every single indicator and strategy. Just knowing the basics like support and resistance, spotting trend lines, or even using indicators like Fibonacci levels are absolutely great for helping you identify likely bounces or reversal zones. But learning charts is only half of it. The other skill that actually matters just as much is research. And I'm not talking about skimming a white paper and calling it a day. I'm talking about zooming out, understanding how the project is structured and what narratives it fits into. And that's because every single major run is driven by narratives. Whether it's 1, 2, 5, or 10, there's always something that sticks out. It could be DeFi, AI agents, real world assets, or something brand new. If you recognize the right one early, you won't just be investing in a singular coin, you'll be the front runner in a narrative movement, which will show incredible returns. Now here's where I would start. Number one, pick a technical analysis tool and just master it. Start with something like the Fibonacci tool and just study it. Watch some tutorials, try applying it to past charts, and then what I would recommend doing is applying it in real time on a demo account. Now I'm telling you, pro analysts don't use 20 different indicators. They have one or a few and develop a strategy around it. Number two, study a previous cycle. Now pick any year, whether it's 2017 or 2021, and go back to see what caused these big green or red candles. Dive into what coins performed well, when the narratives changed, and how long they also lasted. You'll actually be kind of surprised how common these are in a bull run, and it'll help you gain a better understanding to how the next bull run might play out. Now, number three, practice research and journaling. Now, as a beginner, it's important to set a daily or weekly habit to analyze one or two coins and write down your thesis, which would be why you're interested, what the upside is, and what could go wrong. Now, journaling is critical, especially if you're trading. Every time you enter or exit a trade, write down what you saw, why you took it, and how it played out. And this is exactly what I mean when I say crypto patterns tend to rhyme. Every so often, the market resets and you're positioned in another opportunity to do three things: learn, rebuild, and buy smart while everything's on sale. But like I said earlier, most people don't. They disappear and they give up until the hype comes back, only to get stuck in the same position they're in right now. This is when the people that want it bad are putting in the work, and they'll be the ones with winning portfolios when the markets do pick back up. Now, if this video helped you see the confusing part of the market differently and how to position yourself when this next leg up happens, make sure you drop a like on this video, subscribe to the channel, and join the Kaizen community down below. I'll see you guys in the next video.